shocking financial news, but nobody's talking about it. We're going to talk about it in this video because it's a big, big deal, and it will shape the future of the silver price and the gold price. But also, let's talk about some crazy situations developing within the silver and gold market, and what the heck is going on with the gold mining stocks. We're going to listen to what Ross Beaty said. Do you know who Ross Beaty is? He's a mining legend, definitely one of the most, if not the most respected person in the precious metals mining sector. And he had some very interesting things to say about the gold and silver mining sector, but also about the price of gold and silver. So let's get started right now. Let's just cover what's going on in the world of gold, this developing story. China, gold, China, the biggest producer of gold in the world. China, not only do they produce, right, those Chinese, they dig up all kinds of gold. And you know what they do with it? They keep it at their house. They keep it in their country. They don't let any of it go over the borders. But what's even more interesting is that China is also one of the world's largest purchasers of gold from the world supermarket. So we know all this gold is getting sucked over from the West to China. It's a big developing situation. The most interesting part of it all is that in China right now on the Shanghai Gold Exchange, the SGE, we want to remember, we like fancy acronyms. You can talk about the SGE at a cocktail party. The price of gold is significantly higher than what it's being sold for on the LBMA and the COMEX, and it's even more striking with silver. We need to get some more up-to-date numbers, but last we'd heard there were huge price differentiations, which, you know, could tell us a little bit of something about what's going on in the world of gold. Now, let's talk about the West, right? Because we know the world central banks are buying all this precious metals. And we know they're repatriating. They're saying, we want our gold back. They're saying, if we don't hold it, just like you and me, if you don't hold it, you don't own it, correct? But what's even more interesting is that the ETFs, the exchange-traded funds, like the GLD and the SLV, now we don't like them. We don't like them because there's much speculation about whether or not they actually have the physical metal that they purport to have to the investors. But nonetheless, they're a major part of the price setting mechanism for silver and gold. And did you know that we've had big outflows from both of those ETFs? So that has been downward pressure on the price, put downward pressure on the price of both silver and gold. The happy ending, because we like happy endings, is that will change. It doesn't go down forever. It will turn around. And when it does, guys, it's going to be when everybody else starts rushing into the metals, and that will be when the ETF inflows start to occur. That will be a big, big deal because a lot of people, a lot of the sheeple, we haven't called them that for a while, but we don't like to be derogatory towards anyone in any way, shape, or form. But, you know, the people that watch the Children's News Network all day long, CNN, no offense to anyone who may watch CNN all day long, but when those people start to think, you know, I think I better get myself some gold or silver because the stock market's not doing too good and the bond market's not doing too good and inflation's going through the roof. You know, I think I remember my great-grandpa telling me that silver and gold keep up with inflation. Maybe I'll get me some of that. And then they say, well, what's the best way? And they say, oh, you buy the ETF, right? They don't know. They don't know what we know about this purported possibility that the ETFs don't actually have all the silver and gold they purport to have. But nonetheless, they'll start buying silver and gold. That's like the marginal, like the extra factor that can drive the price of the metals. And if that occurs at a time where throughout the world we continue to see the increase in silver and gold purchasing and the central banks continuing, it could be happy times for silver and gold investors. So what did Ross Beaty Ross Beaty, he started like 38 companies, I don't know, 20 companies, every one of which has been super successful in the mining sector. He's in his 70s now. He's a big philanthropist, but he's still actively involved in the gold and silver sector, actively involved in the gold sector as chairman and founder of Equinox Gold. And he had some interesting things to say about the metals. He said, be prepared for change. Everything going on with China. Didn't we cover that already? Didn't we cover that already? And by the way, if you're looking to get yourself some silver, gold, or platinum, go check out Pimbex. They're an online bullion dealer. They're a sponsor of Ron's Basement. They make this video possible for you, but most importantly, they're quality people, quality organization. I purchased from them long before they agreed to be a sponsor of the channel. They've got great prices, great selection. Add them on your list of who to check out when you go to buy yourself some silver, gold, or platinum. Now, Ross Beaty, he said things are going to change with China. I said that already. You know, Susie, my wife, you guys all know Susie. She likes to call me Repeater Ron. And so I have to apologize to you if I say Repeater Ron. She also said I'm saying the word interesting too much. And, I can't, anyway. So I'm trying to use other words besides interesting, like compelling or fascinating. It's fascinating what Ross Beaty had to say about the silver and gold market. Do you want to hear more? Because I have something that's enthralling. You might just like it. He pointed out the dollar. The strong dollar that's a bunch of bunk. We know that anyway. Yeah, the dollar's strong. If you're comparing, it's like, I can't think of a better analogy, so I'll just say, no, I can't say that. That's too dirty. It's like comparing the two worst cars in a used car lot. Okay? That's the Euro car and the yen car, the three worst cars. You got the Euro car, the yen car, and the dollar car. They're the worst cars in the parking in the used car lot at the worst used car lot in your city. Envision that. But the dollar is the best of the three worst cars. So it's strong. Yeah, well, even if you're going to present that argument to us, the fact remains that the dollar can't remain as quote-unquote strong relative to those other currencies for much longer. And I know that's what he was saying. Also, interest rates. Ross Beaty brought up the fact, the Fed's done, guys. Jerome, we're going to hear tomorrow. Oh, my gosh. Tomorrow's like the Super Bowl again for silver and gold investors. Be prepared. It could be ugly, okay? Let's talk about the Fed because Ross brought this up. So I'm staying on track. Don't you stay with me. Tomorrow could be a big, scary day. Put on your big boy and big girl pants tomorrow for silver and gold. Not so much what they do, because it's pretty much guaranteed they're not going to do anything tomorrow. They've telegraphed that. They could surprise us. If they raise rates tomorrow or do something crazy, it could be temporarily, that's the key word we need to remember, very difficult for the silver price and the gold price. But most likely, the big key for you, all right, the big takeaway from what goes on tomorrow when our old friend, you want me to get him out, Jerome? Type 5 if you want me to get Jerome out. You think I'm going to get him out, but only if I see some 5s will I get him out. What Jerome says will be more important tomorrow. And the big takeaway there is, don't forget, I saw some 5s, that when this guy talks, he's full of, it. Yeah, that's right. He's full of this. I haven't had that out for a while. Yeah. It's all a bunch of hot air. Let's say like tomorrow they shockingly raise rates by 0.5%, which extremely unlikely. But nonetheless, they raise rates tomorrow by 0.5%. No matter what they're doing at this point, they've turned the smoke machine up and they bought some extra mirrors. It's smoke and mirrors time. Because in real terms, there's nothing they can do, and they can't fight inflation. I've seen headlines now from like other legit sources. By the way, I'm going to get back to that point, but a lot of you have been talking and sending me emails about how you like to spy on me around the basement and look for little Easter eggs. There's an Easter egg hidden in this video. It's on the screen right now. It's called the hide the hot dog game. Who can be the first person to find the hot dog today? Anyway, no matter what he says, it's all smoke and mirrors. Okay, it's all smoke and mirrors, and we're heading into a situation where, in real terms, okay, everything the Fed does is going to be smoke and mirror, make believe. In real terms, we're going to be harvesting more value as silver and gold investors. Now, if you invest in the stocks like I do, you can get your rear handed to you on a plate like I did this morning with Equinox Gold. Speaking of Ross Beaty, the mining legend, and the company put out some. That's why you got to be careful with precious metal mining stocks. They are risky, guys, and Equinox is one of the best in breed in the mid-tier arena, and the stock had been doing really well, but it's down like almost 20% today because they basically, this is how crazy it is, they basically refinanced some of their debt. It'd be like you refinancing your house debt, but the market perceived it as their, I don't know, supposedly maybe there's some trouble they're not talking about, who knows. It'll be interesting to see in the coming year. I wonder right now, a year from now, where Equinox stock will be. It'll be super, super interesting. Okay, now hey, another stock you can check out, and as a channel sponsor, see that bear? He loves First Mining Gold. They're a Canadian gold development company. What's interesting about First Mining Gold is they're not exploring, okay, they've already found and defined 2 5 million ounce projects in Canada. That's like the most mining friendly jurisdiction in the world right now. One in Quebec, one in Ontario. In Ontario, it's a spring pole project, and in Quebec, it's the Du Parquet project. They just put that one all together over the last year, and they are actually exploring at both of those as well. So they could add to that 5 million ounces, but it's gold in the ground. If you want gold in the ground in Canada, I don't think, me personally, you can find a better value opportunity right now than First Mining Gold. Dan Wilton is the CEO. Keith Neumeyer, who many of you know, is the founder and chairman, and Keith owns a bunch of the stock. So, you know, it's an interesting opportunity. Mining stocks are risky. Do your own due diligence. Okay, but Ross Beaty had a lot to say about mining stocks and the disconnect between mining stocks right now and the gold price. We're going to get to that next. But since I love getting off track, CoinShop Chris was kind enough to send me a text telling me that Wesley found the hot dog. Woohoo! If any of you play pinball, there's the world's best pinball game, and I promise I'll get back to gold and silver, is called the Funhouse, and there's a hot dog on there, and the guy says, hot dog, hot dog, Wesley. I'll hide the hot dog every day this week and see who can find it. Now, gold mining stocks, there's never been such a disconnect between the price of the mining stocks and the price of gold and silver. Now, that can tell us a couple things, right? Number one, either the mining stocks are going to have to go way up to get back to just a reasonable valuation, or, and we don't want this, I know we don't want this to happen. I don't even want to say this to you, but I have to say this. I'm your friend. I'm going to tell you things that maybe you don't want to hear from time to time. The other option is the price of gold and silver come down, and then that relationship would also be back to more normal ranges. But there's a fancy calculation, net present value, which calculates the future value of the cash flows of the company. We won't get into that because that stuff's kind of boring to most of you. But right now, the net present value for the gold stocks is like 0.4, and historically it's been as high as 2 or 3. So it's just unbelievable. But what does that tell us about the silver and gold price too? When the sentiment, the feeling toward the mining stocks is so horrific. I mean, mining stocks are in the gutter. Period. Here's a crazy interesting statistic. Sit down for this one. The Toronto Stock Exchange, the TSX, and then there's the TSXV, which is where many of the smaller mining companies are traded. Volume of shares, the number of shares that are traded on the TSXV hasn't been this low since gold was at $250 per ounce. Is that crazy or what? So guys, does the sentiment in the mining sector, do you think that matters for the price of the metals? It does matter. It does matter because that's just an overall, probably one of the best quantitative measures we have of how people generally, investors, are feeling about silver and gold. So really the central banks, and we know that the ETFs are losing money. So really right now we've got the central banks that have held up the price of gold. What do you think? Are you ready for happy party time? Because what do you think is going to happen when investors come back into the mining stocks? When investors, right? When investors come back into the ETFs, it's going to be, there's not going to be metal available. I'm sorry. None. No, sorry. No metal for you. No soup for you. No metal for you. No metal. Right? It's like you're going to go to your local coin shop and everything's going to be wiped out. And have you experienced that? I've experienced that. I walked into my local coin shop. I said, where's all the silver? And they said, it's gone. Gone, gone. And that happens in an instant, baby. You know, faster than Susie locks the door when I say something during this live stream that she doesn't like. And then I spend the rest of the day down here in the basement. You know, I mean, it's going to happen super, super quick. The buyers are on strike. That's what Ross Beaty said. Let me tell you a few more things. Oh, he also said it can change overnight. Sentiment, guys, that's the thing. And we've been just beat, body blow, right? One after another. Speaking of body blows, we've got 100 thumbs up. That means I ring this bell 10 times, one ring for each 10 thumbs up. If you don't like the bell, I'm sorry. Think of peaceful thoughts or happy thoughts when I ring the bell. But a lot of people like the bell, and I kind of like the bell. It's part of the show. Like the Blindfolded Bears, the Red Shirt, Susie, Coin Shop, Chris, all the moderators who are here today. Don't worry, we're going to get back to gold and silver. Annie Oakley, hey, Jake. Good to see you, my friend. Coin Shop, Chris, Jake, Annie Oakley, thank you for moderating. It's difficult. These guys try to keep the chat quality is the best way I can say it. And that's a big deal because we want quality here. You're quality. Hey, do me a favor. I'm only going to beg you one time. I'm just going to ask you one little favor. Please give this a thumbs up. It looks like that. It's a button on your screen. When you push it, the word gets out to more people. Thank you very much. Sentiment, it can all change in an instant, guys. It can all change for you in an instant. The silver price, the gold price, I mean, heck, the gold price the gold price is still within a stone's throw of a new all-time high. I've been swamped this morning, but last I saw it was hanging in there. I think the futures price was like $19.50 per ounce when I looked last night. That's not far off from an all-time high, you know? But the sentiment in general, and that'll have a big impact on the silver price. That'll have a big impact on the mining prices. You know, it's great. Now, when you talk about mining, the other thing, you know, we primarily talk about the physical metals on this show, but a lot of us are into the mining stocks as well. We often forget this about metals. There's a limited supply on the planet, okay? Think about the globe. I'll bring it down. I have my grandpa's globe from the 1940s up here. I'm looking at it right now. On that globe, envision the Earth. There's only so much silver and gold on the planet. What does that mean? I want you to think about that for a second. Number one, that means it's valuable. It's finite in supply. But from the precious metal miner perspective as well, every time a miner digs up an ounce of silver or gold out of the ground, that's one less ounce that can be dug up. It's a depleting industry. It's an industry that is constantly needing to replenish its supply, but it's not a renewable resource. We're not talking about lumber where they can grow more trees. You can't grow more gold. You can't print gold. You can't print silver. Have you thought about that? You can't electronically make more gold or silver. You can try, and some people would argue that those ETFs that we talked about earlier, the SLV and the GLD, possibly, I'm not saying anything. I don't want to get in any trouble, but possibly maybe does the COMEX? What about our friends at the COMEX? Do they print gold and silver? They've got this little problem there where they have like tens, or some people say hundreds of contracts written for each 1 real ounce of metal that they have in their vaults. It's an interesting deal. Now, we got shocking news. Thank you, Jim, for the super chat. Guys, the super chats go a long way to support the channel. Never expected, always appreciated. Jim says, buy more silver, drain the COMEX. And thank you, Jim. I love that you love the show. That's an awesome, everybody here, thank you. We got big news. I started out talking about it. I almost forgot. Crazy financial news. 2 things, but nobody's talking about it. I guarantee you, do a little test. Go through the rest of the day. Don't talk about this with anybody and see if anybody brings this up to you. But it's the biggest thing going on, maybe even in the history of the world from a financial perspective, and it's happening right now. 2 things. The United States, congratulations, America. You hit $33 trillion in debt. Let me read you what Tavi Costa, he's a hedge fund financial manager, super sharp guy. Let me read you what he put on X. He said, what's even more concerning than the federal debt surpassing $33 trillion for the first time in history, what's even more concerning is the fact that it has been growing at an annualized rate of 18.5% since June alone. That would be June of this year. The debt is growing at almost 19%. Woo! Not a good thing. Now, what's even crazier? Are you ready for even more crazy town? This is nuts. And this shows how the banks, why the banks are on life support. And this has to do with the national debt, okay? But why the banks are on life support. This came from Bloomberg. Oh, Bloomberg. So it's legit, right? Yeah, sure. Bloomberg headline, sub 50 cent price on Treasury bond underscores investor pain. Guys, what they're saying is bonds are priced on a $1 basis. That means if you bought a bond, let's say 4 years ago, one of these bonds that we're going to talk about, and you put in, let's say, $100,000 into this bond, a U.S. Treasury bond, okay? You put $100,000 into it, and you wanted to get out of that bond. The bond market's bigger than the stock market, in case you didn't know that. A lot of people don't. A lot of us forget that. If you went to sell that $100,000 bond today that you'd bought 3 or 4 years ago, you would get less than $50,000. Okay, that's because interest rates have gone up. When you bought that bond 3 years ago, it had a 1.5%. It's a 30 a bond here. I'll read this to you. Oh no, I won't. I'm gonna stay on track so Susie doesn't get mad at me. When you bought the bond, it had a very low rate. Let's say 1.5%, 2% for 30 years. Now that rates have gone up, who wants to buy that bond from you? You only earn 1.5% on it when somebody could go buy a brand new bond, because don't forget the Treasury, $33 trillion in debt and has to refinance $17 trillion of the current debt in the coming 2 years. They're doing that at much higher rates. So let's say you want to go buy a bond right now, and your neighbor says, oh, I got one. I bought it 3 years ago. It pays 1.5%. And you're like, well, why would I buy that bond from you when I can go buy a new bond that pays 4 or 4.5%? And that's why your neighbor would say, well, I'll give you a discount. You get 100,000 back at the end of the term, the time period that the bond is set for. But you'll get 100 grand back. Instead of you paying me 100, why don't you just pay me 49? And that's exactly what's going on right now. And this is why we talk about the banks being on life support, because the banks, now this is the most extreme example of bond pricing, but the banks bought a bunch of bonds during that period at these lower rates, and now they may be only worth 60, 70, 80% face value. So when you gave your bank 100 grand 3 years ago, they went out and bought these bonds, right? Because they thought, well, we're going to pay you nothing in interest, and we're going to make 2 or 3%. Well, now those bonds are worthless. If you go to the bank and say you want your money, they're going to be like, well, those bonds we bought with your money aren't quite worth what we owe you. That's the potential, right? I don't want to create a, but that's a fact. That's an absolute fact of what's going on. Bloomberg says 50 cents on the dollar is a very low price in the world of bonds. Yes, I would agree. In most cases, it signals that investors believe the seller of the debt is in such financial distress that it could default. Here, let's just read this real quick. So when U.S. Treasury bonds sank below that price Monday, it raised eyebrows. The security, due in May of the year 2050, so it's a 30-year bond, right? Probably that was issued in 2020, briefly touched as low as 49 and right under 50 cents per dollar, marking the second time in the past 2 months it has fallen below the 50-cent level. Okay, it says, of course, the United States is not in danger of defaulting anytime soon. Well, I have a question about that. If what Tavi Costa said is true and the debt is increasing at 20% annualized rate, I guess Jerome will just print away and everything will be fine. What's the other big thing right now? What's the big thing? I want you to think about this. What do you hear that's when they talk about Bidenomics? Bidenomics. That makes me, well, anyway, I won't go there. Thank you, Craig Edmonds. It says philosopher's stone Ron might help make gold. Thank you for the super chat and the funny comment. I appreciate it. What's the one thing? What's the one thing on all the mainstream media that's Bidenomics? Bidenomics, it's working. Did you hear him say that? He said, we've accomplished so much. Heck, we're spending 1.4 trillion more per year than we bring in, and we've managed to accomplish 2% GDP growth. Well, woohoo! Yay! Good job. Good job, Washington. You guys are knocking it out of the park, man. Yeah, Bidenomics, it's working. But what's the one thing they always fall back on? It's the labor market. The labor market's so strong. Yeah, well, it's a little bit of a leftover from the screwed up situation that we had during the health crisis that we had back in 2020. And companies were hard up for employees, and then they got employees, and now they're reticent to let them go. But what are we seeing in the labor market? CoinShop Chris shared an interesting article with me that said basically this year, usually holiday hiring is a big deal. Companies beef up before the holidays, especially on the retail side. We're seeing holiday hiring levels that haven't been this low since the great financial crisis. Yes, that great financial crisis. We know Walmart's lowering starting wages for a lot of their employees. And even most interesting, guys, this is critical, absolutely critical. When we analyze the number of small businesses, because remember, small businesses, they're the heartbeat of the U.S. economy. When we analyze the number of small businesses that have just one job opening, or at least one job opening. The number of small businesses with those job openings is falling off a cliff. And think about this. Before companies lay people off, what's the first thing they're going to do? They're going to get rid of their job openings. So, we're moving into a period of time where there is a confluence, a coming together of what we could, I think, I don't know. I don't. We want to be positive. We want to be happy, right? But is it becoming clear to you that we're moving into a period 6 months to a year where we may see some real challenging times, some possible doom times ahead of us? Let me know in the chat if you think. Type 5, the number 5. I'm going to type it right now because I think we are heading into a major storm in the next 6 months to a year. Got Silver was the first one. Number 5. Thank you, Got Silver. Need to wear your Roundhouse. Yes. My Roundhouse overalls. We'll talk about that on another live stream. I love Roundhouse overalls. No doubt about it. Jim McDaniels, Coin Shop Chris, Tony, Richard Cooper, The Wealth of Nations, Patriot Paul, Yowzer Dowser, he's got about 5 million fives. Greg Smith has 5 fives, 5 times 5. Count Derpula. Yeah, it just feels just unbelievable what we're heading into. It's going to be an interesting ride. There's no doubt about it. Hey, guys, can we get to a 200 thumbs up? That's always my goal, and if we can get there, I'll ring the cowbell, okay? We got more to talk about. Okay? Here. Did you know? I didn't know this for sure. We talked about China. We talked about their being the world's biggest gold producer, being the world's biggest purchaser of gold. But did you know that in August, gold hit new record highs in yuan? That's the Chinese currency. And demand improved. Here's some interesting, this is from Zero Hedge. China's the world's biggest gold market. While the price of gold declined in dollar terms in August, it was up 2% in Chinese yuan due to the currency weakness. While with prices rising, gold has outperformed many other assets in China. Gold withdrawals, this is interesting, from the Shanghai Gold Exchange, the SGE. Come on, man, we need those thumbs up. We're getting to 200. Can we do it? Don't leave me. Totaled 161 tons last month, reflecting strong wholesale demand for gold. This represented a 46-ton month-on-month increase. All right. And did you know this? Chinese Valentine's Day is coming up, and jewelry fairs are scheduled in September. This will likely boost retail demand this month. We can't forget the rest of the world views silver and gold completely different than the way you and I and our neighbors do. We look at ourselves as lone wolves, right? If we were a herd of cows, right, the whole herd would be sitting out in the sun baking. We would be the couple cows under the shade tree by the stream drinking water, right? That's how we are as silver and gold investors here in the United States. In Europe, especially in India, China, South America, Brazil, I heard somebody talking about how different gold is viewed in South America, including Argentina and Brazil. They look at it completely different. The World Gold Council said, we believe improving gold demand and relatively tepid imports in recent months may have led to local demand and supply conditions tightening, pushing up the premium. And then they talk about the premiums. We've covered that ad nauseum. There's a big difference, and I think the even more important, massive difference when we talk about the Chinese market for precious metals is that the Shanghai Gold Exchange, the SGE, is absolutely more of a physical market. They don't play the games like the COMEX does and the LBMA. They've been manipulating the price of silver. I'm just going to say it. I'll go out on a limb. And look, there have been warriors, silver and gold, precious metal warriors here in the United States who've spent their career researching and fighting and putting out reports about how the COMEX and the LBMA have manipulated the price of silver and gold. Look no further than the fact that we had recent convictions of 2 traders from JP Morgan. Are you going to tell me? I mean, come on, man. If our government was able to prove that 2 people from JP Morgan were manipulating the price of silver and gold, think about this. I want you to think about this. Are you going to tell me that's not just the tip of the iceberg in regards to what really, really goes on? Hey, guys, we got the 200 thumbs up. I knew we'd do it. Thank you. Thank you. It's time to ring the cowbell. Oh, we were talking about cows earlier. All right, guys, thank you for being here. I'll be back tomorrow. It's going to be crazy town tomorrow, absolute crazy town in the silver and gold market. Be prepared. Be buckled up, okay? It could be a challenging afternoon for silver and gold investors. Jerome's going to speak. Remember, watch what he does, and from that perspective, realize whatever he is doing at this point, they basically have been neutered. Also, what he says, and do a little reading about what the Fed has said over the last 20 or 30 years, and I think you'll get a pretty high level of confidence that it's a lot of hot air, okay? Look, we aren't full of hot air. We do our best to discern what's really going on out there. I appreciate you guys being here. I appreciate all the support. I appreciate the super chats. Most importantly, number one thing I appreciate is that you, I'm going to point from far away, yeah, you have joined us from all over the world to talk about the metals, okay? I'll see you tomorrow. Be good.